Hello and welcome back together to my financial update on the markets. We are talking today about S&P 500, US oil, gold and Bitcoin against the US dollar. Like always, I want to start with S&P 500 index, analyze the last price movements and how it will probably behave in the future and give you a couple of scenarios you can prepare for. Let's start with the weekly time frame. On the weekly, we can see that we are technical in an uptrend. We had a couple of impulses to the upside and smaller corrections to the downside. But now we have this secondary weekly orange dotted uptrend line that got broken to the downside, and the correction was heavier than expected. So now the idea of a double top scenario comes in play. So this would be the double top, the failed new all-time high. And from here on, market reverses. And we will see bearish action maybe to the last all-time high for January 2022 in combination with the weekly orange solid uptrend line and the 200 moving average. That would be the bearish case. But technically, we can only talk about a failed cycle or shift from a bullish market to a bearish market if we take out the last weekly low and create a lower low. Yeah, but more to that at the daily time frame. On the daily time frame, we can see my last setup, or I can throw it back in if you want. Here was this consolidation zone close below the last all-time high, and my thesis was that if we break out above this all-time high, I would set my stop loss level below this consolidation zone, and my take profit area would be maybe around the 6,000 point level in the index. That would have been a great risk-reward ratio of over 2 to 1. And yeah, the market hasn't given me that. Instead, we broke lower below this consolidation zone and continued declining in price. If we switch shortly to the 4-hour time frame, you can see that this could have been also a good trading opportunity, but I wasn't seeing it in the moment because I was in my head prepared for rising prices, and my trade setup was built based on this idea of rising prices. So a good example why you always should think in two scenarios to be prepared in both directions. After the break of this consolidation zone to the downside in combination with a cross of the 4-hour MACD indicator across to the downside, so bearish, you could have opened up a position at the retest of this broken area, stop loss above the structure and take profit below. So for that trade to get into take profit, it would take some more percentages of declining, but not much. Yeah, I wasn't on board. That's trading. You can't catch any move. But yeah, let's switch back again to the daily time frame to see what is possible from here. To trade the bearish idea, it's pretty hard in my opinion, because maybe we will bounce back at this retest of the daily downtrend line that got broken. The retest would be here. From there on, we can well recover and make again all-time highs. For trading this market to the downside, so shorting the market, I would wait for a break of this daily support and resistance zone, or even the takeout of the weekly low. Maybe you wait for a retest, also hitting this 200 moving average, make a retest, and then the break of the retest to the downside is your entry, and from there on you speculate on lower prices. That could look like the following: place your entry right here, stop loss below the retest, and take profit near this weekly support in combination with the weekly uptrend line. Yeah, that would be a good spot, but I think I would cover that in my next weekend update, because I think that takes a couple of days to evolve. The thing that could go a little bit faster is the bullish scenario, where we will find also around here, maybe directly or a little bit lower support, break this downtrend to the upside. We will see that better at the 4-hour time frame, continue the uptrend. Maybe from there on we will be range bound, it's also possible, but my favorite scenario would be a break above the all-time high, a retest, then an entry, and speculating on higher rising prices. Yeah, let's go to the 4-hour time frame. Here you can see my 4-hour blue dotted downtrend line I have drawn in. MACD indicator at the 4-hour could turn in the next couple of days and then break, maybe bounce at this 200 moving average, or like I said, the daily downtrend line, and then finally break this one to the upside, make a retest, and continue higher. In this case, I would trade like the following: entry above the retest, stop loss below the last low, and then take profit, or moving your stop loss to your entry level, the last all-time high level. And from there on, you can scale up. And if you take profits here, fine. 2-to-1 risk ratio would be great. Otherwise, you can take your stop loss level to your entry point and then scale your take profit up to the near 6,000 points level. It's not looking that great in this view. Let's change that one moment. Yeah, here are your targets. We see something like that. Retest to the all-time high level. Break above the retest, entry point. Take profit. Yeah, there are a couple of scenarios or similar ones. I will update you in my next weekend update what I did with the S&P 500. And yeah, let's switch to US oil, I would say. Oil on the weekly time frame, we can see the red solid monthly downtrend line. That one got broken to the upside a couple of weeks ago, or even years. It was June 2021. And from there on, we moved into a weekly consolidation, moving around a really often tested monthly support and resistance zone. And also the 200 moving average was often at play and supported price from falling below. Then we have seen a breakout to the upside, was bullish for me. But after that, the 200 moving average got broken to the downside, and also price got rejected from it after retesting the break. And from there on, we moved lower. I have seen that already at the daily time frame and covered it on the last couple of weekend update reports. We moved on the daily into this triangle formation, and normally the side where price decides to break out of this formation is also the direction price is following the next couple of days and weeks. And so also this year was the case. First I thought it's a fake out, but then we have seen a lower low, and then from me it was clear that we will probably see price decline in the direction of the breakout, maybe all the way back to this weekly support zone here. Because of that, I also traded it to the downside. I covered in my last weekend update how I was setting up this trade. We had this smaller correction to the upside, then the break of it, and I entered it. Stop loss above the last high and take profit 2.3 times my risk away to the downside. Yeah, like I said in my last update, I expect that we will see here testing these lows. We already did it partial, and maybe going all the way back to this orange weekly support zone. So be prepared for some more declining in US oil. But for now, I closed my trade with a good take profit. You can see it here in my trading. US oil plus $2,488 US dollars, or in this case 2.48% in my portfolio. That was a good thing. And yeah, I will wait for maybe another correction. Maybe we'll short that one then again, or see price come all the way back down without me on board to this weekly support zone, and wait maybe for a break of this daily solid downward line to the upside, and from there on speculate again on higher prices. That's it for US oil. Not much, but simple. Let's switch to gold. Gold on the weekly time frame, we can see everything looks still bullish. We have been able on the long term to break this weekly resistance zone to the upside. Since then, we are in bullish mood and have seen new all-time highs on the way up. At the daily time frame, we can see this daily secondary uptrend line is still intact. We have been able to break out of this range and this afterwards this triangle formation here. And now price is a little bit struggling to make a new all-time high. There are a couple of scenarios. Maybe we'll see a little bit more setback again to this daily secondary uptrend line and this upper triangle downtrend line. And from there on, start again rising and breaking the all-time highs to the upside, and are in for a last move before correcting this weekly impulse to the upside again in a weekly correction. Yeah, how I will play this out. Let's have a look at the forward time frame. Here you can see the 4-hour support and resistance zones, resistance here at the all-time high and support here at the area where we are able to break out of this triangle. I was drawing this 4-hour downtrend line here and it also got broken to the upside. Then we had this really small retest and then this big green engulfing candle to the upside. And I was a little bit late. The information came on my phone, but I have seen it not fast enough, so I wasn't in here with the trade. Otherwise I would have been entered probably here with an entry on the long side and a stop loss below the last low and hope for a breakout to the upside and continuing the overall bull trend. Luckily I haven't taken this trade because we have stayed range bound and reversed at the all-time high here and came all the way back down into this range. Maybe it will keep ranging, so my strategy here is to wait for a clear breakout to the upside above the all-time highs and waiting for a reset and a break of the reset to the upside, or entering directly after seeing a good move above the all-time highs to the upside and probably placing my stop loss below the main action here, somewhere here, maybe below this secondary daily uptrend line, and hope the price will keeps rising, probably here to the 2,600 US dollar level or something like that. That would be great and would give me also a good risk reward ratio. Can throw it in here, maybe here something like that would be okay. Yeah, 1.5 risk reward ratio, that would something I could live with. And yeah, but I would risk here a little bit less because my stop loss wouldn't be completely below the structure. But if I put it below the structure, my risk reward ratio isn't good enough. So instead of doing that, I would reduce my risk I'm taking with the trade. Yeah, after that, I would expect that we see a turn in the market and make our weekly correction. But I will cover that in later episodes. That's the bullish case. Let's look at the bearish one. If price will break out of this range to the lower side, break also this 200 moving average and this daily secondary dotted uptrend line to the downside, make a retest, break the retest to the downside, that would be bearish, and I would expect that we will rise a little bit deeper, probably first, okay, that arrow looks a little bit crazy here, to this upper side of the band of this range, or even break this range to the downside and continue lower, maybe to the midpoint of this range, where we also find support in price. Or in the worst case, all the way back down to the solid daily uptrend line and the lower side of this consolidation zone. Yeah, I think that's the least likely scenario. I think more that we maybe see a retest to this secondary uptrend line, and then after that a new all-time high and a last move before the major decline that maybe will retest again this upper side here. But I can throw you that in at the weekly so you know better what I'm talking about. Probably something like that would be a great retest. But before that, like I said, I would expect move back to the 2,600 US dollar level, around that area. Don't be too picky with me. $100 more or less, and yeah, then I set back maybe here to this level where we find again support and price, and from there on we will see if we break this downtrend, then again to the upside and continue the long-term bull trend. Gold is in here because that's really bullish price action, and you should be cautious about gold. Don't underestimate it. If gold moves, it moves a lot. Otherwise, it just stays in range. So use that and stay with me. I update you in my next weekend report also about gold, like always. So let's switch to our last but not the worst asset, Bitcoin against US dollar. Bitcoin on the weekly time frame, we have seen a new all-time high, and since then we are in a declining phase. We have seen an impulse, a correction, a huge impulse, and then a not so huge correction, but therefore a long-lasting correction. And yeah, that point was really deep, slightly below this weekly support zone that got tested a couple of times, and again price is testing this area. In my view, this will probably be the low of this correction. I also said it here, but I think indeed this will be more likely now the low of this complete movement. So I would look for an entry to the long side around this interesting area where price often bounces to the upside. On a daily time frame, we can see how Bitcoin moves into this daily price channel and respects it really well. Here at that point, I thought maybe at the midpoint of the range at this daily support and resistance zone, we have seen a break of this smaller correction to the upside. And from there, I thought we will see higher prices to the upper side of the channel. That wasn't the case. Price turned here at the retesting of the weekly solid orange uptrend line and reversed. And here around that area, I got stopped out of my trade and I lost, was around 1%. Yeah, $1,050 or a little bit more than 1% of my account balance. But still, with the positive oil trade, I'm still with over 6% in profit. Yeah, now we see a little bit Bitcoin bounce at the lower side of the price channel in combination with this weekly support zone. And yeah, that would be a good spot for a long trade. Therefore, we switch to the 4-hour time frame. Here we can see this 4-hour blue dotted downtrend line. If that one gets broken to the upside, and we will see a retest, similar something like that. That would be great, because then we could trade this correction, the break above this correction. We could enter a trade to the long side and speculate again on rising prices. That could look like the following. You have to adjust like reality will show you price. Stop loss below the last low. Let's move it here. I don't know yet if that's the low, but I would estimate that could be the low. And from there on, higher prices. If you get above this area here, you have to surely take some coins off the table or move your stop loss to your entry, so you're running the rest of the trade risk-free. And I would speculate that we will again run all the way up to this upper band of the price channel. That would be a really, really great risk-reward ratio, like you can see here. But we will see if price is willing to give us this opportunity. Yeah, that's a bullish case. For sure, there's also a bearish case. The bearish case would look like the following. Let's switch again to the daily. We will break below this lower line of the price channel and also break this weekly support zone to the downside and probably also take out the last low, make a retest, and then we will probably see prices decline all the way to this monthly solid red uptrend line in combination with this weekly support zone. I think that's unlikely. I don't think that we will see a new low here. I think that's really the last low. But thinking is not knowing, so be prepared for everything. Because of that, I have risk management and stop loss areas. And yeah, that's my view on Bitcoin and my plan for next week. I keep you updated on the next weekend report. If you haven't subscribed yet, try that out and you will get notified if you activate the bell on my YouTube side. We're here and see us. Bye bye.